meeting of the Governance and Audit Committee of the 6th of December. If we could ask for apologies for absence, please.
Thank you, Chair. Apologies from Councillor Adam Davis, also from Julie Davis and Gillian Gillett.
Thank you. Agenda item 2, disclosures of interest, please.
Yes, Chair. Agenda item 6, the Internal Audit Monitoring Report, Quarter 2. I'm a member of the Port Authority.
Okay, thank you, Mike. Paxton.
Sorry.
Thank you, Madam Chairman. Also, declaration of interest in terms of item number 6 as well as Governor Boys School.
Okay, thank you. Councillor Jeff Jones.
Yes, likewise, item 6, Governor of
And Councillor Mike Lewis.
Yes, I'm a member of the Port Health Authority.
Thank you. No others? Hands? Not seeing. Bear with me, I'm working with a smaller screen in front of me today, so it's quite new. Okay, the next item on the agenda is agenda item 3, which are the minutes of the meeting of the 25th of October. If we can take them page by page for accuracy, please. Page 1, page 2, page 3, page 4, page 5, page 6, page 7, page 8, page 9, page 10, and page 11. If they're an accurate reflection of that meeting, could I have some hands up, please, to approve them? I've got hands up in the room, hands up on screen. So we'll take those as an approved set of minutes for that meeting in October. Thank you for that. We now move on for the biggest item of the agenda this afternoon. We've got Ben Smith with us today. A little bit under the weather, but I am grateful for his attendance through Teams to take us through the accounts. It is an important part of the work of the Governance and Audit Committee, but we need to take some assurance currently regarding the work that Audit Wales do in ensuring the accounts present a fair and accurate reflection of the position within the council. But if there are any questions regarding the accounts, then obviously please ask those questions when we have the opportunity to do so. So if I can hand over to you, please, Ben.
Thank you, Chair. And as you've said, I must acknowledge your gracious accommodating my various asks, including putting the heaviest item on the agenda first. And I will have to leave with your permission in partway through the meeting. I will do it as discreetly and quietly as possible. As you've rightly acknowledged, you have the draft statement of accounts in front of you. They are for information, but I would urge you to ask questions of me if there are matters that you wish to clarify. I won't repeat huge amounts of what's in the document because I'll be here for half a lifetime. I would start by acknowledging the elephant in the room, which our external auditors referenced at the last meeting, and I fully acknowledge we have not met the legal deadline to produce the draft statement of accounts. I did do a briefing note to committee members. Welcome to the world that is the mess of local government finance in England, Wales and Scotland. There's not a day goes by without the Public Accounts Committee or the Department for Levelling Up Housing and Communities reporting, and not a day goes by without stuff being reported in the press. I must emphasise, because I would not wish to mislead the committee, Wales is in a stronger position both in terms of its accounts closure and in terms of its audit process than it seems in England. But trying to reconcile accounts done to a professional international accounting standard along with a whole raft of legislative barriers does mean it becomes increasingly Alice in Wonderland around trying to meet all of the requirements and distill it down into a document. And the rules look foolish when, as was reported in the mainstream media and technical press, less than 1% of councils in the UK manage to achieve those legal deadlines. They are foolish deadlines. But I must emphasise we are still late in a Welsh context, and as my briefing note indicated, even a large authority such as our own relies on just a small number of specialist people in various areas. And the biggest problem is that once you're late with the accounts, it becomes then burdensome on those that are also doing the monitoring, who are doing the budget setting, who are also trying to implement a new accounting system at exactly the same time. In terms of the accounts themselves, it is clearly the case that we are still under pressure on our capital accounting arrangements. That was the cause of the qualification a couple of years ago, and we have made enormous steps, and that includes implementing a new SIPFA system for our capital accounting. But it is also the case that when I draw your attention to the balance sheet, it's the single biggest set of entries in the accounts. So frankly, if they're out by 0.5%, they're above the auditor's materiality threshold. And the later the accounts are open until they're closed off, the more chance there is for our auditors, perfectly reasonably, to say, has anything happened to asset values, or have any events occurred in the meantime that would cause a change in those values? So it is something that does still concern me professionally, that we are stretched. That should not come as a surprise, given the previous qualification a couple of years ago, which we improved upon last year. And it should also not come as a surprise, given that the revenue outturns were taken through relatively quickly, but I did have to delay the capital outturn once again through to cabinet. And I would emphasise that I've got the same finite number of officers who are working on, with colleagues, implementing a new system, albeit the new system doesn't kick in until next year for accounts closure. And that is another matter that means it's very, very challenging and extremely unlikely that we would hit those May and equally on the auditors' July deadlines for next year's accounts, regrettably, as I drew your attention to in the press. As the accounts are open for such a period of time, there's also the case that anything could materialise in the current year, which could be by way of provision or issue, which could legitimately be considered for prior year. And that's something that I am likely to be updating Cabinet and Council on in due course. My view at the moment is the accounts are presented accurately and adequately, recognising what risks there are and including appropriate disclosure notes. But until the Auditor General signs the completion certificate, the accounts are open. And if you look, some councils in England have got accounts open for 5-6 years. And we rushed around last year to get them done. I'm grateful to our external audit colleagues for getting them done by the 30th of March. It gets really, really difficult when you get into the following year, where you're setting a budget for a year hence in the current year and also not closed off the previous year. You can very rapidly get 3 or 4 sets of accounts all stacked up, or certainly budgets and accounts stacked up upon themselves. I have also agreed with the auditors that there will be a minor tweak as a minimum to the annual governance statement reference. It did come up in their audit of the pension fund arrangements. I'm pleased to note that, given members have disclosed their membership of the Port Health Authority and there are members from the pension fund here, both of those have been done, completed, and completion certificates issued. But I have agreed that I will clarify the reasons for the delay for last year's accounts, in terms of the mix between what the obligation is on me and my staff versus the external auditors. In terms of the accounts themselves, because that's quite a long preamble, what you're looking for, as you've had training in previous years, are they in the same format? Are they prepared to accounting standards? And you look for my advice on that, and ultimately you will take comfort from the external auditor. And you're looking for anything odd. Have I done anything weird and wonderful, like fundamentally change the accounting policies or principles, or put anything wild and wacky in? My officer advice is I have not, and I expect the auditors to form the same view in due course, but they are, of course, independent of me. And as I've indicated, the area of greatest nervousness for me is still the complexity of those technical reserves and the capital valuations. In terms of the core accounts themselves, I'm going to draw your attention to a couple of the pages. I'm using the numbering convention of the agenda report pages. So if I'd start with page 25, and I will canter through a few things because I don't expect everyone to have read them all, but if they have and they want to ask questions, feel free to do so. Page 25 discloses in the narrative report the ongoing impact of COVID-19, both in terms of grants and in terms of loss of income and costs. You will see very clearly in that table it's materially reduced down from the thick end of nearly 100 million, having been 200 million the year before, down to still 17-18 million pounds each. So they are disclosed separately because they are above the materiality threshold for things that the auditor would look at, and I think they are still pertinent for readers of the accounts. I think it very unlikely there will be a disclosure note in the coming years accounts closure, simply because they will drop off and be below the magical £10 million mark. But there are still real pressures on services as a result of the fallout of COVID-19. So I wanted to draw your attention to the still quite material sums in 22-23 that are loitering in the accounts. If I move you on to the next page in terms of the narrative report, which is the revenue spending, same format as normal years. Down on a page, we are getting close gross to spending the thick end of £1 billion. So I'm sure when you receive next year's accounts, they will be at or above the £1 billion in terms of gross spending and how financed from grant income, specific grants, etc. There is a change in position compared to previous years when you've received the accounts, and this was reflected upon me at outturn. This accounts of the previous 3 years had very material underspends across the piece. 22-23 outturned an overspend, which is shown by a draw from reserves. But the important thing to note, as I commented in council, is that the actual draw from reserves was relatively modest and materially less than the budgeted planned draw from reserves, because there was an expectation that elements such as the Economic Recovery Fund would be used. And the same is going to be repeated in the current year, where the budget was set on the basis of large draws from reserves to help ease some of the especially energy cost pressures. But that is an important change. It's a factual change. We are now in a overspend and drawing from reserves position, albeit modest, and I'm sure it won't take a genius to work out that that is likely to get worse for this council, as it is for every other council in the land, given the commentary you see in the media. Page 27 summarises the capital programme in similar form on a page. I still continue to look to minimise actual external borrowing applied against the capital programme, because interest rates have now moved against all councils, and I am looking to draw down our own resources wherever possible to finance the programme. The thing that perhaps doesn't come across so much in this one, which has been referenced in the outturn report on capital and in the monitoring, is that there continues to be significant slippage on the capital programme, which is of concern to members, but it warms the cockles of my heart because it enables me to make some beneficial gains on the capital financing side in the revenue account, which has stood this authority in very, very good stead. I am, with your indulgence, going to jump next to agenda page 42, and you bear with me whilst I scroll down myself on the screen. So big a document, I can't even find the things myself, which summarises the level of reserves, and that is something that is of great debate and discussion. So the movement in reserve statement, a number of authorities are under enormous pressure in terms of having to use reserves to balance their books. This sets out our overall reserves and shows how much is in the funny money unusable reserves at the far end versus the specific reserves and the amount carried in the general fund. The position was, as you would expect as you read those couple of pages, that general fund reserves were maintained. There was a draw from earmarked reserves, a temporary add to the housing revenue account reserves, and an awfully wide swing in terms of the funny money reserves, especially as a result of the pension fund. The pension fund was valued in surplus the previous year. There's been a slight deterioration in the current year on balance sheet, but it is still materially funded, and that results in the removal of the vast majority of what's called that negative pension fund reserve. One of those weird and wonderful things that local government has to do to carry in its books to make it look like normal people's accounts, but also comply with statute and make sure that there's no impact on taxpayers as a result of applying international accounting standards. I draw your attention to page 45 and 46 next, which is the balance sheet. That's the point I was emphasising, that when you look at long-term assets, you've got a couple of £1 billion worth there, very stable year on year, as you would expect. But it is that means if it's out by 0.5%, it's over 10 million quid, and will undoubtedly be a focus of our auditors in this year's accounts review. It'll take you over to the following page, which is page 46. You will see that the total reserves, the very last line, has doubled, but it's in the funny money as I refer to it. It is the material change in the pensions reserve, which has come down by over £600 million, reflective of the effective elimination of the deficit borrow bit on the overall pension fund, which was enabled us to be able to make budget savings in current year budget in terms of employers' contributions. So although they're funny money in one sense, they're important in another because they reflect the reality of tremendous investment fund performance by the fund, for which I am the Section 151 officer, for which I'm incredibly grateful to the members on the pension committee, the pension board, and my officers who do an awful lot of work on my behalf for the pension fund. I would draw your attention next to page 88, which is another major statement, which is the analysis of reserves. Again, given the focus on the overall reserves that authorities have and how robust they are likely to be when they are facing significant financial pressures is important. The reserves for this authority are by any measure large. In absolute terms, they are also relatively large in terms of earmarked reserves as a result of a number of decisions to set aside underspends in previous years and use them for redistribution back through the Economic Recovery Fund, the Capital Equalisation Reserve, which enables me to defer having to take out borrowing at now elevated rates. So in summary, in terms of the accounts, everything I think you would expect to see there is there. They're in the same format. Every year I go through a dialogue and discussion with the auditors about improving them and adding more disclosure bits in. My regulator in terms of my professional institute asks me to simplify them by putting more stuff in, and then we take a look back and go, oh dear, we're over 200 pages again, which is why I've only cantered through the main items. And as I say, you've got the big items which will be of interest. I've drawn your attention to the risks that we have. We have got 2 or 3 risks there that I've highlighted in terms of the auditor will take a view on, and the Auditor General is entitled to take an independent view on. It's also important for me because it is one of those key measures of financial health, and have I done my job diligently enough in terms of producing a set of accounts to a suitable standard without qualification on time? I've clearly failed on the time one again, I think, as of almost every treasurer in the land, and we'll see where we are on the other matters. I do have to say that it's not a fun time to be a treasurer, and I think you'll have a bit more from me on that one in the next item. We've got some real strengths here in terms of strength of balance sheet, strength of reserve, strength of cash. I have got some long-serving staff with a lot of knowledge of the council, but I've also lost a number of staff, as of probably any other director who would come before you. And when you lose those in a very tight competitive labour market, it is very difficult to shore it up in the short term, and recovering the position, if anything, is discovered by our auditors. And the reality is they're likely to finish quite late again because we were late delivering them, that it then becomes almost impossible to put them in time for the following year, which means you can have several years of trying to recover the position fully. So I pay tribute to my staff who've worked diligently through whilst doing other jobs at the same time. I think they're as professionally good as we could make them. I think there are concerns still on the valuation side and on capital accounting, and frankly I could have lasted for forever, been a bit like painting the Humber Bridge, but I have to ultimately draw a view as to, do I direct limited resources to future MTFP and the outlook looking not particularly rosy, maintaining control in the current year, which we'll probably touch upon in the next for information item, versus old and done but still important. So I think that's all I need to do in terms of taking you through at a very high level canter, but I do acknowledge, as do our auditors, these are incredibly long, complicated, and at times dull documents for the public and readers, but they are an important way of trying to distill it all down into what the council did in money terms and ultimately discharge public funds. So thank you, Chair.
Thank you, Ben, for summarising that, and also for pointing us to the key page numbers with regards to where our attention is needed on that line. I understand the issues you've had with the deadlines and the targets there. Do we know when the auditors, Audit Wales, are hoping to complete the review?
They have indicated to me that they can only commit to hoping to have achieved it by the end of March, which was the same commitment they gave last year. I am dependent upon them. So they've had the accounts for over a month. They had them in October by the agreed revised deadline, still very late, which I accept. But at the moment, I'm not expecting them until the end of March, which is unfortunate in one sense, but it would be pot calling the kettle black, given that I was relatively late delivering them in the first case, Chair. And I think you've asked that question because you are concerned, as am I, that you want to get them done and out the way, because it otherwise doesn't give you a sound base for going forward. Plus, as I say, it leaves officers tied up on 3 or 4 things at once. But that's the indication I've had from external audit in terms of their timelines.
Thank you. You mentioned about the issues that was had previously around the capital accounting principles. Are they going to look at that early on in the review, do you know? So it gives any opportunity to have more time to look at it if they are indeed going to consider doing something adverse?
I'm sure they will target that early. They've already asked some questions of the capital valuation side. It would be odd if they didn't choose to look at those relatively early on. I'll remind you, the main issue was effectively during the middle of COVID, asking us to recreate things from 20 years ago. They may be professionally, technically correct, and I wouldn't dispute their position. But that's incredibly difficult to do because I haven't got a DeLorean time machine. So I think there's 2 aspects to it. It's the split. They should be testing that we have a new system. It is the SIP for system for capital accounting, so it ought to bleed in work. We've had to buy in some additional support on that. But the other side of it is also the asset valuations, and that in itself is an art, isn't it? Because the valuations are done, and in theory, if something were valued on the 1st of April 22, it's been valued in year. But if the accounts are open and delivered late and then not signed off for effectively up to 2 years' time, the auditor's mind will turn to, could there be a material change? And frankly, 0.5% is a material change. So they have asked some questions on that. But they make their own decisions on what they look at first. But I'm sure they would adopt a risk-based proportionate approach and know what things to look at first.
Okay, thank you, Ben. If you can keep us up to speed with anything that's coming out of the blue, so we're kept well informed. Okay, then, can I open up to any questions from members, please? Anyone remote? Councillor Jeff Jones?
Yeah, thanks, Chair, and thanks, Ben, for all the work. And I understand the pressure you and your staff are continually under. Perhaps just to clarify one particular point on page 29, I think it is. It's the pension right at the top there. The pension. I know you mentioned something about the pension fund when you give an overview there. The pension fund deficit at the 31st of March is 78 million. But at the 31st of March 22, it was 714 million. Is that a 714 million deficit?
Yes, at the previous time, it was a deficit. Many council pension funds were in deficit for a number of years because of something that was done historically, that because I'm not allowed to be political, I couldn't possibly say what caused it. But you'll recall in other fora that the sterling performance by the pension fund when it was, and then its last revaluation literally eliminated almost all of the deficit in one foul swoop. Another year's moved on, so there has been some dipping down in performance, but we had stellar performance by our pension fund as a result of decisions taken by our advisors, our officers, and our excellent pension committee and excellent chair. And the reality is it's smashed it out of the park. A lot of funds, local government funds, are now 100% funded or near 100% funded, and they are fairly unique in the public sector in being fully funded. They are not here today, gone tomorrow, pay-as-you-go funds. They are meant to be fully funded over the longer term. And yet, effectively, we removed it all in one foul swoop in 1 3-year period. And I was pleased as punch for the council and for members, and it translated into millions of pounds a year of employer savings. So it does turn the funny money stuff and the long-term stuff, which is ultimately the assets of the pension fund members, into real help on the pressures that this council faced and helped set a budget for the current year. So it removed effectively overnight almost all of the deficit in that 1 3-year period. The performance returns were, even by local government standards, stellar, and I couldn't have been more pleased as a result of those. And it's the main reason that the balance sheet is doubled in value. I mean, it does show the vagaries of it, of having to carry what would, we have to carry these weird and wonderful negative reserves, capital financing reserves, fixed asset restatement reserves, those weird and wonderful things, because there is a real tension between doing it to make it look like a set of company accounts and not ultimately resulting in any of those entries impacting upon taxpayers. So that wild swing is enormous. It should be enormous because it is reflected of underlying investment returns. So it's nothing but good news.
Okay. Chair, if I can ask, something else as well. On page 31, it actually mentions about the forthcoming pressures that we expect, with regards to, revenue shortfalls and so on. I know you've actually got a figure here of 5%. If we increase it up until, I think it's 26, 27, we'd still have a shortfall of £39.9 million. And then actually coming down, we'd actually talking about investing in some capital infrastructure, a significant part of which will need to be financed from its own revenue resources. I know we're living off our reserves as such at the present time, but those are going to actually go down. It also mentions the City Deal region. I know we were due to have, I think it was 25 million over 15 years. I know some of that was accelerated. Has that all been expended yet, or some not expended, but have we received all that £25 million yet? And actually looking forward to the future, I'm a little bit worried really with regards to the pressures we're actually going to be under with revenue shortfalls.
So in no particular order, Chair, the City Deal continues to pay us in instalments. There has been some significant acceleration, but we are still receiving funds from that. And the point you rightly allude to was we did an awful lot of heavy lifting early days. So we've spent a lot of it ourselves. And we are still due to receive sums over a number of years. The reference, you're absolutely right, is to we financed our large capital programme by externally borrowing 210 million at what are now, with hindsight, ridiculously low rates, which is a luxury position to be in, and the planned use of reserves to finance capital spend temporarily to avoid having to borrow at the current elevated rates does stand us in very, very good stead, probably compared to any other council in Wales, possibly even the UK. I couldn't necessarily prove that outlandish claim, but it clearly provides enormous flexibility. It means I can give officer advice as to the best time to choose to go back out, and it's clearly not now when interest rates have rocketed compared to where they were. But you rightly, Councillor Jones, make the point that we are going to be drawing from reserves. The distinction I would make is, they can only be spent once, but I'm always going to be more pleased to be planning to draw them. Councillors and council ultimately makes the decision on my professional advice, but planned decisions to draw from reserves are a policy matter. Where it starts to get concerning and would be of concern to the committee and myself is if they were unplanned draws from reserves. So as long as council has spelled out to it the consequences of doing capital, deferring it, drawing on balances, recognising that some of the headwinds we've avoided and some of the benefits we've had as a result of the interest movements are temporary, then I feel I've done my job to inform members to make the best informed choices they can. But it's certainly left this council in a much stronger position than it otherwise would have been. And as I started saying, it's never a fun time to be a treasurer. I'd rather be a treasurer with money in the bank than one that doesn't have money in the bank. And clearly the performance over the previous 3 years has enormously helped our position and gives me quite a lot of flexibility to give council as a whole opportunity to do things of a matter of its own timing. You rightly draw attention, and it's still a live matter, and I'll be back tomorrow in front of council in terms of the fallout implications and the good, the bad and the ugly of the autumn budget statement and where things are likely to go. But as you rightly say, effectively, you'd have to be under a rock not to realise that the whole of local government is in some financial difficulty in current year, and the outlook is incredibly challenging. I do take comfort, and I hope members will take some comfort, that the scale of our cash, our scale of our reserves means we have a bit more time on our sides than most who may be forced into doing things sooner. But certainly the outlook is very, very challenging for all councils, as you've rightly drawn attention to. Thank you, Chair.
Thank you.
Thank you, Ben. Councillor Leslie Walton.
Yeah, no question, just a positive comment. I can hear in what you're saying how much stress you're under and the frustration that you've not been able to get the counts done on time. So I'd just like to thank you for all your hard work, and please can you pass that back to all of your team.
Thank you, Councillor, and I will, because it does wound one's professional pride. I mean, this council did manage to hit May and get the accounts over in previous years. We are under enormous pressure. Again, the comfort I do take, and it is appreciated, and I will relay it back to the staff, is that pretty much every council is in this place. I mean, I read in one of the trade magazines yesterday, the chief exec of Tunbridge Wells wasn't so much disgusted as delighted, because he was one of the random 7 councils in the whole of the UK that had managed to comply with the legislative deadline, but equally making the point he didn't see it as the most important priority for his council. So it is appreciated. Times are challenging. Thank you very much, Councillor Walton.
Thank you. David Robert.
Hiya, Ben. Just nothing specific in the report, just some themes really, 2 or 3 themes. The first one is in regard to Welsh Government grants. Having worked on the health side in the public sector, whenever the Welsh Government gave you any money, they wanted something back straight away. So I just wondered if there was a similar theme with the council where they gave you a grant, but they immediately want efficiency savings around that.
It's perhaps not quite so explicit as perhaps you experienced in the health service. I mean, my concern is more that a number of those specific grants are given for ministerial priorities, which perhaps mean that there isn't as much generosity as there otherwise could have been in core grant. And then when those specific grants may be chosen by ministers because of economic headwinds to withdraw, we find ourselves more exposed. And I would equally acknowledge that that obviously we are in a fortunate position compared to health board colleagues, in that as much as the bulk of our money comes from Welsh Government, we do have some in our own gift in terms of decisions on council tax. So that may be why they don't particularly have so many obvious efficiency requirements on top, but effectively in their overall deliberations and calculations, I'm sure they take into account an assumption of what they think they can get away with giving us, recognising that they would expect some efficiencies on the core side, but equally recognising that we do collectively as a whole hold quite substantial reserves. Most public sector bodies do not have that flexibility, but equally it's always a finite balance, because once they're only there to be used once. I am a much more relaxed treasurer than I would be from 3 years ago, where we went from 60 to 160 million in earmarked reserves. I would say as a treasurer, I'm always going to be a treasurer happier with money in the bank. That still leads to further policy decisions on what the trade-off is between council tax, what's the right level of reserves and everything else. But clearly having quite a relatively large stockpile does leave us in greater control of our destiny, as does the tax raising ability, which ought to be recognised. And that may be some of the reasons why I don't feel it's quite so explicit that you're given on one hand and taken almost bit of it back with the other.
Okay, thanks, Ben. The other one was in regard to liabilities and claims against the council, etc., financial settlements, the effect on the annual premium and how much that premium is in respect of amount, if you like, and obviously the effect from the less complaints, the less claims, obviously the lower the premium.
You're referring to insurance premiums, and
yes, that's right.
Yes.
Yeah.
Again, we do have to maintain external premium cover for employers and public liability, as would anyone. But actually, given our relative size and because we do have large cash-backed reserves, we do also self-insure ourselves for quite a large amount of our own liabilities, and that's why we carry a quite sizable £20 million insurance reserve on the balance sheet. That is cash-backed. Again, it is always a judgment call as to how much you can self-insure, what risks you take versus a very large event. We do have stop-loss arrangements in terms of excesses to cover us. Our claims experience is typically pretty good. and does seem to fairly limit our premium increases. There are some increases in premium which is in keeping with the insurance market as a whole. I mean, the corollary is if we're successful in one sense, then it means I'm being mean to people who are seeking to make claims from us. But I think we strike a relatively good balance, and there is some pressure on premiums, but nowhere near to a level that's destabilizing. And I think that's some testimony to our insurance function. And again, the flexibility we're able to self-insure. I'm sure if you were thinking in a health context, clearly some of the scale of the losses that could be incurred if you were to receive a major claim probably are especially magnified in there, and they would be things that would be too big to try and even self-insure. Whereas some of the things we do self-insure are quite sizable in event, but that's why we carry a number of reserves, both insurance specifically. I do take actuarial advice from professional insurers to try and get the balance right, but equally some insurance arrangements I have to have in law, like any other employer.
Yeah. Just a final one from me, really, around usable and unusable reserves. Is this bound within a legal framework, or can the status of each change, vice versa?
It's effectively determined by proper accounting practice and the Accounting Code of Practice issued by SIPFA, which produces, so the Secretary of State and Welsh ministers recognise SIPFA as the standard setter, and there is the Accounting Code of Practice for local government, and it very, very explicitly prescribes what are the usable ones and what are the unusable ones. And the three main unusable ones are those two technical capital accounting ones and the pension minus reserve one, the ones I deliberately call the funny money reserves because they are ginormous. They only exist in really local government terms because we are trying to make them look like proper company accounts, but also have some legislative constraints. So they are very heavily prescribed, not directly by statute, but statute recognises a regulator and standard setter, and that's the regulator and standard setter is SIPFA, of which I am a member. Other accounting bodies are available, and certainly our external auditors regulate us to those standards. So I can think of no scenario in which an unusable became usable and vice versa. They really are the weird end of the balance sheet that no one really understands particularly well, possibly including myself, dare I say, but that might frighten you as an audit committee if I were to concede that. But mostly they are driven by, we have to do some debits that conflicts with the law. So there's a statutory override prescribed by ministers. So we have to put the credit somewhere. So it becomes a reserve. If it's a reserve, it's sort of pretty much marked as unusable. And the other distinction, and which I should probably, although you didn't ask it, I should make clear, is the other one is the ultra ring fencing of the housing revenue account. So schools reserves are technically me, albeit they are schools, and I probably wouldn't be very popular if I ever were to suggest that they were the council's reserves, but legally they are. The HRA is described in statutes. So that's a usable reserve, but only for the benefit of HRA tenants, and there's an ultra ring fence around that. I can't think of any other event that would result in there being a crossing between the usable and unusable. They're an accounting device for anoraks.
Okay, thanks very much. And just to reiterate, really, thank you and your staff for the inputs to the accounts, obviously on the report today, and wishing you a speedy recovery as well.
Thank you, Ben. I'm going to work my way down the table now. So Paxton Hood-Williams, please.
Thank you, Madam Chairman. I really just wanted to reiterate Councillor Walton's comments to Mr. Smith and his staff. As simple as that. It's just been done again there. So
Thank you.
it came from all shapes and directions now again.
Gordon Anderson.
Yeah, thank you, Ben. Just go back to the pension fund. I was a grateful recipient of the triple lock. What do you forecast the effect of these 20% raises will have on the fund in the years to come?
The triple lock in itself doesn't particularly cause me issue. It not directly. I mean, clearly any macroeconomic decisions taken by whoever is the government of the day may add to or subtract from inflation and investment returns and may ultimately indirectly affect us. Again, the recipients of local government pensions are uprated in line with CPI in September of each year. So it's similar to, but not subject to quite the same number of locks as there are. Effectively, there's two. There's the indexation for inflation, but there is also a weird and wonderful interaction with the Treasury if inflation were ever negative. It did happen once in my lifetime of being a treasurer. You know, there are perhaps some indirect consequences further on, but I don't immediately see any upon the pension fund in itself, unless I've missed anything you were particularly thinking of. So apologies if I had misunderstood.
Thank you. There are no more hands up in the room either. So I just got a couple of points, Ben, to query. The first one's on page 37 on your comprehensive income and expenditure statement. I'm just picking up the variance really on the gross income across those first three lines. Notice there's a drop in that gross income for those three areas. I just wonder if there's any particular reason for that. It's the income and expenditure statement on page 37. Your gross income.
Unmute myself, apologies. Nothing that immediately springs to mind that, that I could answer directly on that one, Chair. That may be one I might need to go back and do some further digging on. You know, I suppose to some extent we've recognised in terms of compensation from Welsh Government elsewhere for some impact on income, but nothing immediately springs to mind on those that I could think of to answer that.
Okay, okay. And the other one is on page 45. And that's the balance sheet and the long-term debtors. I noticed there's been an increase in March 23. And is there any issues that we need to be aware of regarding that increase in long-term debtors? Page 45. Halfway down that table.
Yes, I can see that one. I mean, yes, it's a material increase in itself, but relatively small in overall terms. I will very quickly try and just go to note 17 to see if there's anything particularly leaping off the page that should interest us. I'm not aware of anything. So if I go to note 17, it will give us a bit more of a clue as to whether there's any particular long-term debtor. So whether I can find the note in the time available and not use the committee's valuable time up. Shows how long the accounts are that even the person in charge of them can't find the entries. I'm getting close. No, am I getting close? Not particularly close. Again, I'm not aware of anything particularly material. I mean, it's an interesting one in sort of analytical review terms. Yes, it's up 60%, but it's a very small part of it. But again, I might need to see if there's anything particular in the note because I'm going to be taking too long to find the note to answer that one, Chair.
Okay, I apologise for not giving you advance notice.
No, that's absolutely fine.
But perhaps you can drop me a line just to give me that detail, particularly on the debtors more than the other.
Yeah, I'll have a look at note 17 offline.
You can blame the good training that we had because they did highlight to us we need to look at the variances.
Well, I think that's exactly why I did draw attention to sort of like the major ones, like the pension fund one, and say, you know, exactly. Okay, I can tell you're an auditor by practice in your former life, as I already know, Chair.
Okay, then. If there are no other questions, then again, you know, as chair, can I convey my appreciation to you and the team? We recognise the pressure you've been under and likely to be further pressure on the horizon until the accounts are signed off by Audit Wales, and also, you know, with the future challenges that you've got. So you've certainly got the appreciation of this committee, and you know, if there's anything as a committee we can do to help, then you just need to let us know. Thank you for that. If we can move forward then to agenda item 5, which is the Finance Directorate Internal Control Environment. And welcome, because this is the first report that you've produced as a directorate around the internal control. So I'm looking forward to hearing what you've got to say on this one, Ben.
Thank you, Chair. I think from memory, I did do a sort of an initial interim one last year, but you rightly recognise it's a relatively new directorate, and you've anticipated probably some of where I'm going with this, which is, again, not overly repeating what's in the report itself because it's for information, but it is a newish directorate. It is still forming. I would wish to particularly acknowledge my colleague Ness Young's assistance, in the sense that I jokingly refer to us as the twin directorates. We are the smaller directorates, and there are some freedoms and flexibilities of being a director and doing things your own way, but it also comes with quite a lot of obligations that you perhaps don't recognise you have to do when you're not a director. So I'm thankful for the flexibilities and opportunities, but there are some things where there are better economies of scale by just pooling some of our resources, and that is also reflected in terms of some of the fuzziness around the duties we have between us in terms of where things sit. Some things that are under Ness's area used to be mine, and vice versa, so there is still an element of that twin relationship over things that directly interlink. Technically, I'm the second smallest directorate, but if I'm honest, if you strip out council tax reduction scheme, I am by far the smallest directorate. And there are times where it doesn't feel it stretches very far compared to some of the larger spending directorates. The control environment report has been ably assisted by Mr. Dong on this year, because it falls to come to you at the same time as I'm somewhat embroiled in budgetary matters. You have a small directorate which is doing everything that everyone else has to do in terms of its risk assessment, performance management, etc. But also it's a directorate that has probably quite a longer reach than most, both in terms of the amount on scale of activity in terms of the pension fund, which dwarfs the council. I have an outside interest in being the clerk and treasurer for the Port Health Authority, which is small but still takes up an important amount of my time. In terms of the risks, in an unfortunate timing, I mean, so the directorate risks are all much relatively small. The single biggest risk is the corporate risk, and that's not been repeated in the appendix because you've got the corporate risks on later. It will come as no surprise in my written narrative that I've drawn attention to the one thing that seems to pervade everything that faces local government at the moment is money, or perhaps more lack of it, and outlook for lack of it. And my large spending directorate colleagues struggling to live within means and heroically trying to live within means, and I think taking it in relatively good stead from myself, with an appropriate stern, firm but cheeky chappy routine with them of reminding them that for me to discharge my statutory duties at the end of the day as custodian of public funds and advisor to council, that they need to contain their spending, as I do mine, and I do tend to try and lead by example. Every treasurer likes to be a bit hair-shirted about these things. But the risks are real. I think when Mr. Howes came and reflected on some of the risks, our risk register is still not perfect. It is long in the tooth. It is out of date in terms of my personal entries. When I was the first standalone director, I was having to do the entries myself. I have improved upon that because I probably need to spend more time doing busy directoring things than some of the updates. So the entries you see will look a little long in the tooth in terms of some of the control measures, and I am looking forward to the new risk system. But the reason I emphasise that is that the one risk is missing because it's in the corporate risks. If I could make it purple rather than red, I probably would, in terms of the risks over the medium term and balancing the budget. And it is one that causes some discussion with Richard Rowlands and myself, because despite all my mitigations, I still have it in the highest risk category whatsoever. And I think Mr. Howes has reflected on this, where things that we capture at risks are sometimes issues or events. And it certainly feels, although I've couched it in the corporate entry as there is a risk the council might overspend unless something happens, it feels pretty much more like an issue and almost a near certainty. And an awful lot of the mitigations are looking to minimise those risks. So I think we have taken steps to improve our compliance around some matters around the regularity of performance appraisals, which had lapsed a little bit. There were things we had to put in place during COVID and stood down. Some of the reporting mechanisms on tracking have been stood down, but equally we have kept everything else going. We have kept core services in terms of revenues and benefits going. I am the directorate with lead responsibility for professional advice on procurement, obviously the lead directorate in terms of your professional internal audit service and one of your main sources of assurance through to committee. I have plenty of interaction with our regulators in external audit in Audit Wales, and despite our sometimes professional tensions in terms of our duties, I do think it works well, and I think collegiately CMT works well in terms of recognising the boundaries between things that I defer to directors on and things that I have to do myself, because I'm one that has to wear two hats, a bit like Ness in some respects, in that on some things I am a service directorate and have to comply with all the rules that directorates have to comply with, but I also am a corporate officer and statutory officer in terms of enforcing a number of statutory duties which go on top of that core duty. The same would apply to some extent to the statutory directors for education and social services and some of their duties. So I'd probably say that in a nutshell, and to avoid reinventing the wheel, I've kept it in the same format as others, and I'm grateful to the format that Adam Hill used to use, and as I say, Mr. Howes has used and others will use. On reflection, at a bit of a push of being cheeky, I always felt it was December was always an interesting and challenging time. I mean, the committee may want to consider about when, everyone will claim they're always busy and there's something that could be done some other time, but December's an especially bad time for me in terms of the heightened timing with budget. So it would be something that might be more beneficial for me to be able to do at a different time in the year. Not sure quite when that is, given there's accounts, there's in-year stuff, and if I'm late with the accounts and such like, but at risk of being a little bit cheeky, I will at least broach that as an option. It still needs to be done, need to be held to account, need to come once a year, etc. But the timing might be better for me if it were slightly different. But I think you'll see the rest of it in normal format. It sets out the scale and range of the things that I do, and I go back to what I said at the beginning. It's not a particularly easy time to be a treasurer, but a treasurer who's quite long in the tooth now, trodden here, seen quite a lot, used to quite a lot, got quite a lot of corporate memory. And I do think my fellow directorates and council and cabinet do listen to the statutory advice I give, albeit ultimately members make decisions, not me. And I think the balance is about right, but there is still a journey to be gone on, and I would openly acknowledge that I need to improve on the timeliness and update of the control measures and risks. They do look long in the tooth, but at the moment I hold probably the biggest risk, and that's not in here, it's in the corporate risk in terms of just the sheer viability of a council. You would be surprised if any treasurer in the land turned up to a committee and didn't say otherwise on that. And I don't think there have been any surprises in terms of the budget monitoring through each year, nor during COVID, nor at outturn. We routinely and regularly flag in advance whether we think we're going to be under or over. I reference equally the distinction I gave to Councillor Jones between random draws from reserves, random reallocations of reserves, as opposed to planned, known about, fully advised positions. And I think the PFM process works and does give a degree of certainty and assurance, which I'm proud of, that officers have kept going all the way through COVID, and equally moving through with the new Oracle Fusion implementation. So yes, we were a month later in terms of budgetary reporting through to Cabinet, but we kept everything running, the sort of necessary machinery you would expect to keep running. And then the other thing that councils have struggled have tended to be in terms of what has been the role of the traditional statutory officers in terms of the Chief Executive Monitoring Officer and Section 151 Officer, and that triumvirate works well and brings to bear on every matter. As Councillor Walton will be aware of, when we've had discussions previously in our views when we formed the annual governance statement, and in terms of some of the strengths, if you don't include those statutory officers in all decisions, you run the risk of making less than optimal decisions, and in some cases, in some councils, foolish decisions. What is ultimately a complicated set of things to do. So that's probably enough from me, Chair, in terms of canter through. And I'm
Okay.
happy to take questions.
Okay, thank you, Ben, for that. I hear what you're saying around timing, and I'm happy for you to liaise with Jeremy to agree a better timing for you to present that paper, because the last thing we want to do is to add additional burden on you in a difficult time. I'd open up to questions if anyone got any questions through Teams. No? One question, David?
Hi, Ben. Sorry, just one question, real one. It's a bit of a global question because it relates to the last agenda item. We talk about finance in the last agenda item. Obviously, there's a capacity and demand on services in various parts of the council. The risk, which you've highlighted on paragraph 2.4 in this report. I mean, are we heading towards? I mean, I don't mean in regard to just Swansea, but maybe all the other 21 local authorities as well, where services are going to have to be rationalised in the future to meet those pinch points of the equation that I've outlined?
I think I'll be careful how I answer that, as I'm sure you'll appreciate.
I didn't want to put you on the spot.
It is clearly the case that whatever is said in terms of nominal increases, the outlook looks very, very challenging for all local authorities.
Yeah.
That includes in Wales. It includes comments that have been made by the First Minister. It includes comments made by the WLGA. Across the border, it includes major comments made by COSLA in Scotland, and the LGA has been incredibly active today, and a lot of references in the mainstream media to the risks that are faced. Even and the autumn budget statement is further challenging. I mean, it's as much politics as it is an officer decision, and I am due to give an update to wider council tomorrow on that. In any scenario, it is challenging. Demography is against us, demand is against us. What worked in challenging times kind of worked when inflation was 2%. Yes, inflation rocketed to 10, 11%. Yes, it dropped back to 6.7. Yes, now it's 4.8, but it's still a pressure and burden on top of other matters. Last year, I gave advice to council. We couldn't afford to budget for our energy bills in the base. They had to be budgeted for one-off, with an intention that when we could afford them, we will budget for them, because they ain't going away. And I think there clearly are very challenging decisions to be made by all councils in Wales. I equally am a little bit nervous that it can be very quick for everyone to rush off to the media and say, we're all going to go bust at some point. I think if you take any trajectory in time and put very, very challenging circumstances and assumptions in terms of public spending, and then have elevated inflation, everyone could draw that conclusion at some point. I think we are in a fortunate position compared to many in Wales, and I do equally think that Wales is in a relatively fortunate position compared to England at the moment. Now, I'm getting close to treading into areas that could be deemed to be political, but I'm trying to stick with fact, in that at the moment, all of the councils that have announced those sorts of issues are the other side of the border, but certainly COSLA at the moment is making enormous noises, as are the LGA, and the WLGA is very, very concerned. When you look at the pressures that we are facing, we face very, very difficult choices. I wouldn't go so far as to say rationing, right. But there are clearly balances to be struck, and I'm equally sympathetic to UK government and Welsh government, because those same discussions are happening at the moment in terms of the same pressures that facing the health boards. And I've recognised we have some reserves, but they're one-off, they're ours. I hope they're not factored into the equation, but it does give us more time than many. If you look at some of the Audit Wales comparatives, they do some comparatives about relative reserves and relative cash backedness, and we are in a strong position compared to many in Wales. In some measures, the strongest in Wales, which, as I say, encourages me, enables me to sleep at least some of the time overnight. But it is really, really challenging. But I wouldn't want to overplay it. If members listen to professional officer advice and are prepared to make decisions, challenging ones, things that they weren't always elected to want to do, They are in control of an awful lot of their own destiny, and we are also in control of our own destiny as a council as to what the level of council tax should be. But that in itself comes with risks and issues because there is a cost of living crisis. And I think
Okay.
the fundamental reason that treasurers are concerned at the moment is inflation is way more than 2%, and what we could cope with 10 years of inflation down at 2% doesn't really work when funding can't keep up with inflation rocketed away. Apologies if I've gone on a bit too long there, Chair.
Okay,
Thanks,
Ben.
Ben. Thank you.
Can I draw you back to your report about your directorate opposed to the wider issue of the council?
Apologies, Chair.
In that same paragraph 2.4, you talk about lack of capacity and resilience across your directorate. How are you managing that? Are there any issues that we need to be aware of with regards to your staffing capacity within your directorate?
So as I alluded to, Chair, even as one of the largest councils in Wales, I run with one fact specialist, one counts closure specialist, one capital specialist. The labour market is incredibly tight. We have to respond to events as we can. I live within budgetary means. I do not feel constrained by those budgetary means. Where I've had to go out, I have gone out. But it does have capacity issues, as you've seen, and you know when it comes to absences through illness, not only in the wider directorate, but also in terms of the audit service, which you have a particular focus on, and you'll have updates in due course. It is challenging. There is a finite number of people, and we are the smallest staffed directorate, second smallest in overall terms, but we manage as best we can, as I'm sure every other directorate would attest to. There aren't large numbers of solutions. I think you see some of it in the evidence of our difficulty in terms of getting the accounts done on time, but much of the rest of the stuff we have broadly stuck to time or been within a month, and actually proved very, very resilient, albeit we weren't a standalone directorate at the time, as a function, pretty resilient through core COVID times.
Okay, thank you, Ben. If there are no further questions, then can I thank you for your time? I know you're under the weather, so if you do want to
Chair.
leave the meeting, feel free to do so. But thank you for your
Chair.
efforts today.
Thank you.
Thank you. If we can move on then to agenda item 6, and this is Simon Cockings with the Internal Audit Monitoring Report for Q2. Simon, over to you.
Yes, thanks, Chair. Good afternoon, everybody. Hope you're all well. This is the standard Q2 monitoring report for the audit function, outlining the work from July to September 2023. In that quarter, a total of 16 audits were finalised, as shown in Appendix 1 and Appendix 2. 7 of those had a high assurance rating, and 9 had a substantial assurance rating. A total of 95 audit recommendations were made, and 100% of those were accepted by management. As Ben alluded to just in his presentation, we have continued to have sickness absence in the team, as shown in 2.6. Unfortunately, at the time of writing the report, we did have an additional member of staff off on long-term sickness. I'm pleased to say that that person is back in work, so that was a short-term issue. But we have also lost another part-time member of staff in September due to long-term ill health and ill health capabilities who actually left the authority at the end of September. So there are still staff issues within the team. That vacant half a post was advertised quite quickly, and that closed last week, and we're currently looking at the application forms to fill that position as soon as possible. So that's being addressed. And as I said, the other member of staff is now back in work, so it's not as bad as it has been. In terms of the progress against the plan, I'll show you in paragraph 2.8. As at the 30th of September, 32% of the audit plan had been completed to at least draft report stage, and an additional 26% was in progress at the end of the quarter. So overall, at the end of September, 58% of the plan had been completed or was underway at that point in time, which is not too bad considering it's the end of Q2. It's not something I need to really alert as an issue to committee at this point in time, but obviously I will keep committee aware of any further issues that are addressed and actually facing the team going forward. Section 4 gives some more information on the moderate audits that we followed up in the quarter. 3 audits were followed up, which included Western Bay Adoption Service, the Freedom of Information Audit, and Rechargeable Works. As you can see in the body of the report, some of the recommendations had not been completed. So, for example, for Western Bay, one medium risk recommendation had not been implemented, so we plan to go back to do a further follow-up in Q4 of that audit. For freedom of information, that was the second follow-up of that audit. We found that 2 medium risk recommendations had not been fully implemented. We were advised as part of the follow-up that it's unlikely to be able to complete those 2 recommendations, primarily due to resource issues. Those recommendations primarily related to responding to requests within 20 days and also trying to reduce the backlog of requests that are currently in place within the service. It's not a completely negative picture because the backlog had reduced when we did the follow-up, so it is improving, but obviously there is still a slight backlog there. And again, the council has sort of addressed this issue and has recognised it in the council's corporate risk register as a non-compliance issue. So it is sort of captured and being monitored there. It's also going to be monitored by the Information Governance Board, and we'll review it as part of the next full audit of the service. Rechargeable works, again, there was one high-risk recommendation that wasn't implemented. So again, we're planning to revisit that service in Q4 to check the implementation of that recommendation. Members might notice that this report has an additional part in section 5. As requested by the chair, the 2 previous separate reports are now combined in one report, basically, to make it a bit more streamlined for the committee to see the work that's been completed. So section 5 basically just summarises the standard follow-up work that the team has done in the quarter. And as you can see, 96 of the 97 recommendations that were followed up were completed as part of the follow-up review, with only one low-risk recommendation not being completed. And that was a low-risk recommendation in relation to design print, which can be seen in Appendix 5, with a scheduled implementation date of March 2024. So that's not yet due for completion. So nothing really to make you aware of there, Chair, in terms of any issues. But yeah, that's a brief overview of the report. And obviously, the appendices are similar to previous. So I'm happy to take any questions, Chair.
Thank you, Simon. And can I thank you for combining the reports? Obviously, the agendas now that we're at 6 weekly meetings are quite substantial. So having a combined report from you is helpful. So if I can just thank you for that. Before I open up to the committee, can I just raise the point regarding your follow-up process? You're going into those 4 areas, as you mentioned, the Western Bay, the FOI, etc., and you're finding non-implementation. Can you outline what the escalation process is when you're continually going in and not seeing action being taken? Is it as a result of they've just not done it by the due date, or are the dates they're agreeing to complete the action too ambitious for them to complete before that visit? So if you can respond to that, please.
Yes, of course, Chair. So the escalation process for, particularly for the moderate issues we find in the moderate reports, obviously they're a bit more key than the standard ones, as you can see. Those non-implemented risks and recommendations are escalated to the director and head of service if we undertake an audit follow-up that's not being completed. Particularly for the ones that are in relation to FOI, obviously those we've been advised they are unlikely to implement those recommendations. And obviously that is discussed as part of the Information Governance Board. And obviously that report has been included, that information has been included in the Data Protection Office's annual report as well. So that was slightly different to the others. That is the only one that's had a second follow-up. So obviously the other 2 that haven't been implemented will be followed up again in a second follow-up. And obviously if they're not completed, they will be escalated to CMT and to the directors.
Okay. And the timelines, so when they agreed the recommendations, do you agree a timeline by which they should be implemented by?
Yeah, we look at the action plan, Chair, and discuss the target implementation dates with the client department. And then we aim to undertake the follow-up within 3 to 6 months after that implementation date. For the moderates, just primarily earlier rather than later, obviously because of their key risks and key issues. So within 3 months of the end target implementation date, we tend to revisit and retest those recommendations, Chair.
Thank you. Councillor Leslie Walton.
Yeah, thanks, Chair. On page 247, there's a couple of things that I think keep coming up. One is purchase order system, and the other one is P-card purchases. I'm just curious that maybe, as this seems to be recurring, might it be that the actual process is not working and perhaps the process itself needs to be reviewed?
We do tend to look at that in more or less every audit, to be honest, Councillor Watson, because of expenditure. We do have separate standalone audits of procurement in certain directorates and also of purchase card administration. So we do have overall overarching broad cut-in audits of these areas, which is reported separately. As you'd probably expect to see, these are substantial rating audit reports. Those issues are not deemed to be high risk necessarily. They're just minor non-compliance issues across a number of different areas of the council, to be honest, Councillor Wharton. So I think the key things to highlight would be the outcomes of those overarching reviews when those come to committee. So that gives you a better overview and feel for the compliance across the organisation as opposed to in smaller areas, if that makes sense, Councillor Wharton.
Yeah, that's okay. I mean, it's just occurred to me that sometimes when these things come up again, you do wonder if it's the process that could be tweaked rather than we keep hearing the same thing and it obviously for whatever reason not working. Maybe it's not working because people don't know about, or need more training on it. But I just want to make sure that we're looking at sort of all possibilities and not losing the fact that it could be the process that might be wrong. That's all. Thank you.
Any further questions from those on Teams? Not seeing any hands up. Any questions from the room? David?
Hi, Simon. Just
Hi, David.
just following on from the chair, really, in regard to let me get to it now. 4.4. It's not about this particular service. It's just the follow up, really. Obviously, this is going back to July and September 2022, and you are on 4.6. You're following up again on the last quarter of this year. Two things really. One is what happens in that quarter if they haven't complied, and a concern obviously about your limited resource in your department, and this constantly having to go back, and obviously the demands going forward as well on new work, you know. So I just wondered if there's non-compliance this time in that quarter four, what's your next step? What happens?
So yeah, David, the next course of action would be to escalate this. As part of the first follow-up, it is escalated with the director and head of service, so they are aware that they have to implement those recommendations by the next time. And obviously, if they haven't at the next time, would be something I'd raise at CMT and escalate to maybe the chief executive to say, look, this hasn't been completed, some action needs to be taken and some intervention needs to be taking place within the service. So that would be the next course of action. As I said, the FOI one is slightly different there with the second follow-up completion, because that is included in other controls within sort of the Information Governance Board. But for others, that would be the next stage to escalate to the CMT and to the directors and the head of service.
Okay. Again, it's just a concern really in regard to the balance of your demands in meeting this year's audits and having to go back to previous recommendations really. So it was just an
Absolutely.
observation, but I was interested what would happen in the next quarter with this particular one, you know. Thank you for
Thanks,
that, Sam.
David.
Thank you.
Any questions from the room? I've just got one question, Simon, and that's regard to the corporate governance review that you did, which you judged at a high assurance level. Noting within the scope there, you've looked at risk management. Can you confirm if your review included the verification of the controls that's stated in the risk registers, particularly the corporate risk registers, to see if those controls were operating effectively?
It's been quite a while since I put this report together, Chair, so I'll have to go back and double check the actual report for that, if you don't mind. I'll come back to you outside of the meeting, Chair, if that's okay.
Yeah, okay then. But can you circulate to me, please, all the reports that you've issued in that quarter? I've not received them as yet.
Yeah, that's fine, Chair.
Okay, thank you. But I'm keen to know if the controls that are articulated in the risk registers are reviewed by internal audit as part of your scope. So if that can be an action for confirmation at the next meeting, 'cause
Okay.
I think that's critical for this committee. Okay, if there are no further questions, can I thank you for that report, Simon, and note the difficulties you've still got, but to a lesser degree regarding staffing. And obviously appreciation for combining the report as
No
well.
problem. Thank you, Chair.
Thank you. We can move on to agenda item 7, which is the counter fraud report.
Good afternoon,
Jonathan?
Chair.
Jonathan, welcome to
Yeah.
the meeting.
Thanks, Chair. Good afternoon, members. I just update you on the work of the corporate fraud team in the first half year and update you on the progress in respect of the corporate fraud plan for 2023-24. And I'm quite content to say that good progress has been made in all the 8 key areas of the report. In terms of housing, we continue to receive a number of referrals from the public and the housing department, and we're conducting full investigations. We are showing a lot more liaison with our counterparts in housing, and I would anticipate at the year end providing much better results than in previous years in terms of housing. As the committee have always requested, we did do a proactive exercise in the summer, looking at potential housing stock being used for short-term let accommodations, mainly in the summer holidays, in the school holidays. I was happy to say we didn't find any areas of concern. However, what we did find was that housing stock, ex-housing stock, was being used for short-term holiday let accommodation, showing that it is a market which we could be concerned with. So we do plan to continue to do that exercise year in, year out now. In terms of council tax, we continue to provide support to council tax in their main fight against fraud in Data Tank, their SPD matching service. And we continue to investigate claims where there's been incorrect discounts claimed, exemptions, premium charges, etc. We haven't as yet looked at Data Tank SPD matching where there's council tax reduction in payment, but that is due to be looked at in the second half of the year. In terms of council tax reduction, we continue to investigate claims of council tax reduction and, where possible, jointly investigate with the Department of Work and Pensions. And again, I anticipate better results in comparison to year on year from the previous year. The National Fraud Initiative, the new exercise came out this year, and good progress has been made in all aspects of the exercise. The corporate fraud team have taken responsibility for all the housing matches because it was identified that our results were a lot lower in comparison to other authorities from the previous exercise. And I'll report on that at the end of the initiative. Additionally, we've also had a new match come through with respect of from HMRC identifying housing tenants who own secondary properties, and that will be looked at in the second half of the year. Internal matters, we continue to support human resources in whichever way they see fit, and we consider all other allegations of fraud, whether it be blue badge, procurement, etc. Raising awareness, as previously reported, we continue to support human resources in online corporate induction training, and that should be imminent to go live in the next few months. In return, regards to policy and procedures, I have been, as I reported previously, I have been looking to change the way we work, review the management and reporting that we can provide. I've looked at internal and external sources of that, and that's an ongoing piece of work. I'm happy to take any questions on the report.
Thank you, Jonathan. I was pleased to read this report and particularly the good progress that you're making in compared to previous years. So well done to you and also to the team that you have. Very positive position than what we've seen previously. Can I just ask you a quick one before I open up to the room? And that's with paragraph 3.2, where you talk about assisting the recovery of the return of 2 properties back to the housing stock. I just wondered, is that a role for the counter fraud team, or was that a one-off
Well,
request?
No, we've had a build up in previous years of reports of illegal subletting, non-residency. We've had these cases going on for years. We just never had the capacity to ever deal with them in a proper manner. I'm very fortunate in that the 2 new staff members that have come onto the team have different skills and different what they perceive is needed, and they basically, I think the best way to describe it is it's boots on ground, knocking on doors, talking to the housing officers, and rather going through far more extensive investigations, paper-based investigations, basically knocking on doors and convincing people that they're not really living at their house and they don't really need their house anymore.
Okay, then I wouldn't expand on that one. I think it's probably a sensitive area for the committee to openly discuss. Thank you, but a very positive position. Councillor Leslie Walton.
Yeah, again, not a question, really just to echo what you've just said. Excellent report, lovely to see, lovely, bit of a weird word, but great to see the savings that you've made, great to see 2 properties back in housing stock, but even better, the word proactive jumped out at me. And I know you and Jeff Fisher used to come to these meetings, and I always used to feel for you because you said you had not got the capacity to do any proactive work, only reactive. So it really is so pleasing to see that you've been able to do a proactive exercise. So thank you, and thank you for your team.
Thank you, Councillor Walton.
Councillor Jeff Jones.
Yeah, thanks for the report. And yeah, it seems a very good report, good progress, even though you've got limited resource. With the changing face of Swansea, are you identifying new patterns of fraud actually coming in? You mentioned something about second homes when you reported there, which is perhaps a new area. I don't know if you've come across it before, but is there, working with other agencies, are there new patterns coming through? I don't suppose you get involved with scammers anyway, but they're always changing, finding new ways to actually take money off people at the end of the day. Are you actually finding, new patterns coming out?
I suppose the easiest way to answer that, Councillor Jones, is the fact that I suppose we're doing this on a day-by-day basis and we just reacting to these things as they come along. So if you're asking me the question, I couldn't tell you off the top of my head of any trends that are happening, because we just deal with them as they come along and we react to them. In terms of scammers, the council has got quite a robust method with regard to scams, but that's dealt with by trading standards as opposed to corporate fraud. To allude on the housing area, short-term B&B, the Airbnb craze has hit the country. We looked at doing something proactive on that because it was identified there were massive problems, not in Swansea, not in Wales, I don't think, but in huge parts of the country, because housing tenancy fraud tends to exist when people can see that there's great value in subletting, i.e. their council house rent. What they can get in the open market compared to their council house rent is a large disparity. And secondly, when there's people just sitting there on the right to buy and waiting years and years and years, so they're getting their discounts year on year, so subletting their property out that way to buy their house at a cheaper rate. But the amount of money that can be made on Airbnb or other users in that market is much greater again than what you can do from subletting. And it has been identified that there was a major issue in one of the London areas. They had an entire block of flats where they'd identified so many properties were being used just for short-term lets in London. So that's the reaction. That was a reactive thing that we did there. But I understand exactly what you're saying with regards to scams. I do see all the scams. I do get all the paperwork through that's dealt with mainly by trading standards, and they offer professional advice on that.
Okay.
Any further questions, David?
Thanks, Chair. Thanks, Jonathan, for the report. Just to reiterate, obviously, the positive picture that's emerging here. I just want to go on to section 4 around the interagency work, and can't stress enough the the pooling of resource here and the strength in obviously sharing the skills and everything else, shared learning and everything else. But equally important is actually this interagency work is closing a lot of fraud loopholes that may exist in other areas. So thanks for that work. And I think you can see obviously that it's going to be strengthening work in this area, really. I also just wanted to give you some praise on the actual appendix as well, the format. Very easy to read, very easy to follow. So thanks very much for that, Jonathan. Thank you.
Thank you. Thanks a lot, Mr. Roberts.
Thank you. Well, I've not seen any more questions, but again, just to draw that to an end with a big well done, and if you can take that back to the team as well, Jonathan.
Thanks very much. I will.
That's lovely. Thank you very much. We can move on then to the next item on the agenda, agenda item 8, which is the corporate risk overview. Richard, are you going to take this one?
Yes, thank you, Chair.
Welcome.
So the report starts on page 275 and it provides an overview of corporate risk during the second quarter. You can see in paragraph 2.3 on page 276 that all the corporate risks were reviewed at least once during the quarter. The changes in the register that did take place over the second quarter can also be seen in paragraph 2.3. We have 5 red risks in the corporate risk registers at the end of quarter 2. No new risks were added, deactivated, de-escalated, or escalated to the corporate risk register during the second quarter. 2 risks had their RAG status changed, and there were also 4 risks that had their residual risk score changed during the quarter, and the reasons for that are listed in paragraph 2.3. Snapshot of the corporate risk registers at the end of quarter 2 is attached at Appendix A on page 279, and a guide to the various headings within the appendix can be found in paragraph 2.4. And then finally in paragraph 3 on page 277, there's a note in there that a review of the Council's risk management policy and framework has commenced. We expect to complete the review by the end of the financial year, and the views of the committee in that process would be welcomed. The terms of reference for that review are attached at Appendix B, starting on page 299. Thank you, Chair.
Thank you, Richard. Nest, do you want to add anything to that before I open up to the members?
No, Chair, that's fine. I'm here to answer questions along with Richard if required, but nothing else to add. Thank you.
Okay. Are there any questions from members that are on Teams? Councillor Leslie Walton.
Yeah, thank you, Chair. Thanks, Richard, for the report. Just looking at this, the review on page 299, one of the things that's often concerned me in the past is I want to make sure that all staff and councillors know the difference between the level of a risk and the likelihood of it happening. I think sometimes people get so obsessed with the level and don't realise, in fact, likelihood is often far more relevant and far more can be far more destructive. So I think that's something that I would like to make sure we get across to everybody. Thanks.
Richard, do you want to respond to that?
Yes, Chair, I think that observation is quite correct. Often the impact of the risk is fairly static, and it's the likelihood that does tend to change. And I think since the introduction of the residual risk score within the risk management system, I think that has also focused minds in terms of the actual level of risk. And I think as part of the review, our plans to bring in a target for risk will also help with that as well, as we can see what target we're actually aiming for in terms of reducing that level of risk.
Thank you.
Thanks.
Any further questions? David?
Hi, Richard. Just one point for me in regard to section 2.3 and the risk ID 94, the pupil attainment. Obviously, I mean, that could be based on current GCSE A-level results, but do you use any other measures locally to determine that? Thank you.
Yeah, there are a number of performance measures that we have that help us to determine the different aspects of where we are with the corporate risk. A number of those are national measures around attainment and attendance, and there are also a number of measures which are monitored through the housing department, which are not national measures, local measures, which they keep an eye on, which then helps inform their assessment of the risk each quarter.
Okay, thank you.
Thank you. Ness, did you want to come in there?
I was just going to say, in terms of Councillor Walton's point, that I think also we've introduced we use the five score matrix, which requires people to score both the likelihood and the impact. And now we're showing that in terms of a number. When you see the residual score and the inherent score, it is made up of both, and it has, I think, helped focus the minds on understanding the difference between those two. But certainly, as we conduct this risk review, we'll ensure that that's emphasised even more strongly.
Thank you, Ness. Mike, Councillor Mike White.
Can I just say, in regards to school attendance, I know schools are doing all they can to put measures in place, because they're still not back because of COVID. Some children are still not obviously coming back into school itself. And I know that schools have done a lot of work with the education welfare officers, their own pastoral teams, to try and encourage those children. But it seems to be a trend that there's a sort of small percentage of children that still are not confident to come back into the actual school premises. So I know that the Education Authority are working on this and doing all they can to encourage their parents that the children actually attend school itself.
Thank you. Thank you for that. Any more questions around the table? I've just got a couple of statements and questions, really. I have spoken to Ness and Richard regarding the review that's currently underway, and I was pleased to hear exactly the wide scope piece of work that's been done to ensure that the council looks at what other councils are doing by way of risk management, and also looking at the professional body around risk. And I was encouraged with the timelines, and there is an indication that in the January meeting we'll have a better idea of what that framework and policy is going to look like. And following that, what I would like to see is a short training session put into our agenda for us to fully understand the new approach that the council hopefully will approve when Ness and Richard has concluded that piece of work, because I think that will help us as we move forward. So that's a comment. There's a couple of things I've picked up in the risk papers that are attached, Richard, and it's one of omission. I notice on, if you bear with me, on page 293, oh sorry, 294, following through a few pages, there are blank control sections. So when regards to mandatory training, there's no control narrative in that. Similarly for social cohesion, net zero 2030 target, and also the development of the new waste strategy. There are no control narratives in those papers. So if you can ensure that they're complete the next time we receive that report, that would be helpful.
Yeah, sorry about that, Chair. I didn't spot
Right.
that. I think that must be an issue with the system producing the report, but I will double check on that and we'll get back to you on it.
Okay, thank you very much. Councillor Leslie Walton.
Yeah, just a quick point back on your suggestion about training once the review has been done. I think that training is probably relevant to all councillors. Maybe prioritise this particular committee, but I think it's something that all councillors should be aware of.
I'd agree with that. I would agree with that. And Ness, perhaps you could take that forward for Councillor Walton.
Yes, certainly. We'll look it'll probably be March for this committee. and then we can follow up with a sort of member development day for the wider council membership.
That's great. Thank you very much, Richard and Ness, for that paper, and also encourage about the development and the improvements that are ongoing. If we can move on then to agenda item 9, which is another information report, and this is very welcomed by me because this is the tracker that we've been asking for the Audit Wales recommendations. Apologies for the type in the appendix being so small, but for those that are looking at it on the screen, we've got the opportunity to enlarge it, but it's still quite small, having said that. But do you want to take us through this, Richard?
Certainly, Chair. It's the appendix you can see on page 308. It's a tracker for all of the national and the local Audit Wales reports, the recommendations on those reports, and they include the recommendations which are for all local authorities in Wales, so the ones from the national reports, but also those which are specific to Swansea Council. And it also includes then the actions that Swansea Council intends to undertake to meet those recommendations, the progress against those actions, and also a target date for completion. Within the tracker itself, you've got the first set of shaded pages of the tracker on pages 308 to 312. So that lists those recommendations and actions that have been completed. And then the second set of pages from page 313 to 316, that contains the recommendations and the actions which are in progress and are yet to be completed. Also, you can see then on the bottom of page, well, it's on page 316 and page 317, we've listed in green the Audit Wales reports that are, well, at least at the time of writing, pending or scheduled for the future, and they'll be added to the tracker after receipt. And then if you go back to the covering report, in the second paragraph of the covering report, which is on page 304, there's just a quick summary there in terms of each audit report and the work in progress to address those outstanding recommendations and the actions to implement those recommendations. But all the detail then is within the tracker itself. Thank you, Chair.
Thank you. I found this report as very, very helpful and very assuring, although it is small on the appendix. Have we got any questions from members on Teams? No? I've got a comment, and it's on page 308, Richard. And it's the third line down on the Together We Can Community Resilience and Self-Reliance. Reading the All Wales recommendations, they recommended that the council use the tool to self-evaluate current engagement performance and practice, to identify where improvements are needed, and to draft an action plan. And the progress to date, I'm not sure, confirms that that was done or not. So Lloyd's saying it's closed. I'm not sure it's addressed it. I'm not asking you to comment at the meeting, but if I could ask that you take that away and have another look at it. I did have a meeting with the chief exec yesterday, and he confirmed that he had seen the report and also found it useful. And I raised that particular one with him, and he was going to pick that up with you as well.
Sure.
So if you can look at that one, but I think it's an important document that we see. I'm not saying at every meeting, but maybe every other meeting, if members agree. Yeah. Are there any other comments on that? But thank you again, Richard. It's been a while coming, but it is very much welcomed, and I do appreciate that. If we can move on then to agenda item 10, which is the Audit Wales. Is this you again, Richard?
Yes, that's right, Chair.
Setting of objectives. You go ahead then.
Yeah, so it's a full information report. It starts on page 318, and it introduces the Audit Wales report into whether or not the council set its wellbeing objectives in accordance with the Sustainable Development Principle as established by the Wellbeing of Future Generations Act. You can see the report in the appendix, Appendix A, on page 323, and the aim of the audit and the questions posed by the audit set out in paragraphs 2.1 to 2.3 on page 319. First of all, as set out in paragraph 3, the audit found that the council had applied the Sustainable Development Principle when setting its wellbeing objectives. Recommendations then to improve the process still further, that's outlined in paragraph 3.2, and those centred around embedding the council's approach to consultation, engagement and co-production, demonstrating how financial savings and associated risks might impact on the council's wellbeing objectives, and then looking for other ways to measure the delivery of those wellbeing objectives at a service level. The council's response to those recommendations set out in paragraph 4.1 on page 320 to paragraph 4.7 on page 321. The report and the council response has been to scrutiny. It went to the Service Improvement, Regeneration and Finance Scrutiny Panel on the 17th of October, and the subsequent letter from the panel to the Cabinet Member for Corporate Services and Performance that can be found at Appendix B, starting on page 339. Thank you, Chair.
Thank you, Richard. Do we have any questions from members on Teams first, please? No? Any questions from the room? David?
Hi, Richard. Just going to section 4.3 around engagement with citizens. It mentions obviously a survey being completed back in October. Any sort of early highlights from that, if you don't mind sharing?
There has been a resident survey that's been undertaken. Some analysis on that has been done. I don't have that with me at the moment, but I'm sure that can be shared with the committee.
Okay, and it mentions obviously here about working with Co-Production Wales. Is that about establishing an actual citizens panel? And in that citizens panel, will we have representation from the community of people with what I call lived in experience, people who are actually heavily involved with council services?
Well, the citizens panels was a pilot exercise. It was very small scale. It was just really to test that approach, and we're reviewing that now to see if that can be sort of rolled out at a larger scale next time round. The co-production work is something different. That's actually working with Co-Production Wales to build a co-production policy and an approach which can be sort of rolled out across the council. So that's still underway at the moment, but we can expect an approach on that to come forward soon. I think Ness might have more information on that.
Okay, and thanks for that. I just look forward to that outcome from that citizens panel. I'll be interested. Thank you.
Okay.
Ness, do you want to add to that?
Just to say on the co-production policy, there's a paper going to the Service Transformation Committee next week, and which is the final draft, I believe, of the co-production policy, which will then make its way through the sort of governance process through to Cabinet and early next year.
Okay.
Thanks, Ness. Thank you.
Thank you. I mean, if the committee are able to see at some point in time the results of that survey, and also the points that David's picked up about the actual service users having an input, I think that would be very beneficial to see. And I also note in paragraph 4.5 of that report around the development of outcome measures, and I just wonder at some point if we can have sight of those. I don't want to step over the boundaries of the performance committees or scrutiny committees, but I think for the Governance and Audit Committee, it may be helpful for us to see and understand exactly what outcome measures are being monitored or used. Happy to discuss that outside of the meeting, Ness, if that.
Yeah, I'm just thinking how best to make that work to ensure that we aren't duplicating. So if we have a chat about that outside, that would be helpful.
Yeah. Okay. Any other questions on that report? Thank you both for that. If we can move to agenda item 11, which is the review of the Council's transformation programme. Ness, you're taking this one.
Yes, I am. Thank you, Chair. So this report invites your comments from the committee. It is a report which outlines our response to a letter which Audit Wales has written to us with regard to a piece of work that they've done looking at our transformation programme. The letter references the fact that it's focused on the work that's been undertaken in the last 12 months or so, noting that we have introduced a new transformation plan and programme in that time. And the focus of their work was around the extent to which we were effectively planning, monitoring, and the delivery of any savings associated with the programme. So the letter from the Audit Wales is at Annex A, and the findings are set out in 2.1 to 2.57. So the overall finding is that we have some sensible arrangements in place for our transformation planning, monitoring and savings delivery, but that there are a number of suggestions which Audit Wales has made for us to strengthen those arrangements further. So section 3 of the report sets out our the council's response to the suggestions, all of which we've accepted. And just to sort of take you through those quickly, the first is that all programme directors have been asked to review the stated outcomes and benefits for their programmes. These were identified originally back in April this year, and so it is timely, given that these programmes are programmes that will take place over a number of years. There obviously has been quite a lot of development of those programmes during the last 12 months, and so we are reviewing the outcomes and benefits for those programmes at Transformation Delivery Board next week on the 14th. There was also a suggestion about making sure the MTFP aligns clearly with the corporate transformation plan. The MTFP that is currently extant references achieving better together. So in the new MTFP, which will go through the governance processes in the new year, we will ensure that the references and links, appropriate links, are made to the corporate transformation plan. And aligned to that also, the medium-term transformation plan will show specifically the transformation savings associated with programmes within the plan, and also those savings are being captured as part of budget monitoring reports going forward too. The second element that links to the programmes themselves is once that we have, as a Transformation Delivery Board, reviewed the outcomes and benefits of each of the programmes, directors will be asked to confirm the timeline for the delivery of those outcomes and benefits for consideration and approval by the Transformation Delivery Board in March 2024. In terms of ensuring linkages with both the individual programmes and the wider governance of the organisation, Transformation Delivery Board minutes are now shared with all individual programme boards, and in each highlight report that goes to the Transformation Delivery Board, programme directors are required to escalate any issues that need to be raised with Transformation Delivery Board members. In terms of the wider governance, the Scrutiny Programme Committee has within its programme to review the overall corporate transformation plan, and then the individual performance panels have programmed in to look at individual programmes throughout the year. And the final element is the Service Transformation Committees, each of which is looking at specific elements of the corporate transformation plan and is working with officers and cabinet members to develop policies in relation to those, which then flow through to the cabinet in the usual way. The final suggestion was around seeking to produce metrics, performance metrics in respect of outcomes and benefits, so that we're actually measuring the impact of the changes that we're making, not just the sort of activities associated with each of the programmes. And so again, that will be something that is a continuing development and will be produced and considered by the Transformation Delivery Board in March 2024. So with that, Chair, I'm happy to take any questions that you may have and would invite you as a committee to comment on the content of the letter and also our response to it. Thank you.
Thank you, Ness. I found this very informative, and I'm sure members will have as well. I've got a couple of hands up from those on Teams. So if we can start with Councillor Leslie Walton. And Councillor Jeff Jones.
Yeah, thanks. I just want to stress how important I think the service transformation committees are in this process, because I think it's important that as many councillors across the council are involved and know what's going on and are part of the making suggestions towards the future direction of the council. So I just wanted to stress, I personally think that those committees play a very important role in all this. Thank you.
Thank you. Councillor Jeff Jones.
Yeah, I've got to agree with Councillor Walton there. We need to know what's actually going on in the council. But specifically, I was referring to 3.4. It says to ensure the medium-term financial plan demonstrates how savings are being delivered by the council, differentiating between business as usual and transformation. So what's actually happened until now is just been a lump sum. You know, how has the saving been identified up until the present time?
I think up until the present time, the savings proposals that have been put into the budget have included a combination of both business as usual and transformation, but it hasn't been specified as to what is it that's actually delivered that saving. Is it a particular program of work, or is it just, you know, making an efficiency because through natural wastage, for example, where somebody's left the organisation. So it's just about providing that clarity of saying, through this programme, we expect to deliver X £1,000 worth of savings. And if the Cabinet report back in April did identify a number of savings associated with these individual programmes, but we also recognised that it was fairly early days. These are really big chunky programmes that are going to take a number of years. And therefore, as we get more into the development of them and into the implementation, those saving figures may change, they may increase, or in some cases, we may identify reasons why an initial envisaged saving can't be delivered. So the MTFP will just make sure that we understand what we think we're going to achieve and that we monitor against that so that we can be held to account for delivery.
Thank you.
Are there any other questions from Teams members? Any questions around the room? Mike?
Can I just ask, Ness, if possible, you say obviously about matrices, are we going to have key performance indicators as well, so we can monitor it?
Yes, yes, absolutely. And we have, it'll be a combination of indicators. So indicators which measure whether we're doing what we said we'd do by the time we said we'd do it, but then also performance indicators that measure the impact of what we're doing so that we can see we are having making the difference that we intended to at the outset. And so that reference in the report to setting outcome and benefits metrics is very much aligned to that, to ensure that we can see over time what's different as a result of our programmes than is currently the case. So we'll be setting baselines and setting targets against them.
Thank you, Ness.
Okay, if there are no further questions, I mean, this is clearly a huge piece of work and a very important piece of work for the council. And I would agree with Councillor Leslie Walton, Councillor Jeff Jones around the importance of the work of the service transformation committees. I mean, I'm minded of the size and the magnitude of this, where you talk about all 12 programmes being identified. And I just wonder whether, Ness, you can give some thought as to, I don't want to cross over any of the boundaries of the Transformation Board or the Transformation Service, Service Transformation Committees, and any other committee that's involved in this scrutiny, etc. But can you give some thought of how the Governance and Assurance Committee can be assured that the work is progressing through the scrutiny and challenge applied at those other forums?
Yes.
I think I think it's important that the Governance and Audit Committee are kept abreast of what's going on, but I don't want to replicate or overlap anything that's been done in the level of detail as it should be through those other areas of meetings. So
Yes,
can I
I'll
ask you
give.
if you
Yeah,
can give some thought to that
certainly.
and perhaps bring something back to us that is giving us a level of assurance of the progress and the work and the rigour that's been applied elsewhere.
Yeah, I certainly will. I guess at this point, I would say, Chair, that hopefully this letter from Audit Wales provides some of that assurance. They've been sitting as observers in not just the Transformation Delivery Board, but some of the individual boards as well. And so, at this point in the development and implementation of our programme, hopefully the committee can receive some assurance that we're on the right track. We're going to make those additional arrangements. So perhaps if I come back in 12 months' time and give you an update, recognising that these are big and sort of long-term programmes rather than coming back more quickly than that.
But obviously it is a positive position that they've communicated, but I think we're at the critical point now of making the moves and taking things forward. So I would like to be kept up to speed, and I lean on you for how that can happen.
Okay.
The recommendation in the front page is saying the Governance and Audit Committee read and review this information, taking note of all the recommendations and making comments. I think we've made comments. I think we've noted the paper, so I think we've done what we've been asked to do here. But I would like an update of how you envisage us being kept informed as we move on into the early part of 2024.
Certainly. Thank you.
Thank you. If we can move on then, the size of the agenda, I think we're doing fairly well. So if we can go on to the tracker report, again, this paper just allows us to keep track of information that we've been asked for, and also work that's ongoing to ensure we receive that information in a timely fashion. Because of the timelines that we work into this afternoon, there's nothing immediately I'd want to pick up, but unless there's any comments from those on Teams or those in the room, no? So you can turn to item 13, the work plan. Again, this is on every agenda to ensure that we're receiving the right information at the right meeting. Obviously, we're meeting every 6 weeks, so the agendas are a bit heftier than what they have been in the past. But I do endeavour to try and keep a tight rein so it doesn't run too long over the period of time, but giving due challenge to the papers that we're receiving. I have spoken to Jeremy earlier on before the meeting regarding the training. So we picked up a training around risk. I've asked Jeremy to bring in a training session around the performance framework, and also I know Simon Cockings has offered an insight into internal audit as well. So we've got a couple of things planned for 2024 regarding future training for members. So unless there are any further comments on those last two papers, agenda item 12 and 13, those on Teams, I'm not seeing any hands up. Those in the room? No? Okay, on that basis then, can I draw the meeting to a close? Before I do so, can I wish everyone a very, very happy Christmas and a healthy New Year, and take care and have good fun. Okay, bye.
Same to you.
Thanks, Paula. Bye. Bye all.
Thank you.